Okay, we're going to do an update for precious metals here. It is July 28th. So, actually, now a couple of days after the Fed meeting, we had a little bit of a fake out just in general for the broader markets. Looked like we were going to dip lower, might have ended up being a fake breakout, but turned out to be actually sort of bullish follow through, right? So, we got another swing low on SPX, and for gold, we went higher. We're going to start here with the gold to silver ratio. And please take a look in the description. I have a link to the last time I talked about this ratio. That was actually almost 2 months ago, so like late May. So, but take a look. Again, all the same principles apply, right? We'll start with just a daily chart really quickly. You can see this massive downdraft from yesterday. So today is Thursday night. So this candle is Thursday, and today this candle right now, since gold and silver trade overnight, is what's going to end up becoming the Friday candle. And you can see very clearly we've already made a new low on the daily, right? So we're already making new lows. It's obviously incredibly early, so this could completely reverse. And remember, this is the ratio of gold to silver. So basically, when this is going down, it means silver is outperforming gold, which is generally very bullish for precious metals. And we're really going to focus on like the longer term trend here. But important to know that this last like really big downdraft on the daily is what caused this huge red candle on the weekly, right? And this red candle is what is called a bearish outside bar. And it is also technically a fake breakout, right? Because we made a new high, and this is a weekly chart, so we made a new high this week, and then we made a massive new low because of that big downdraft today. And that big downdraft today was caused by the huge outperformance of silver versus gold today. Silver was up like, I don't know, maybe 6 or 7% today. So, and gold was up as well. And that's the thing it's really important. This is a secondary metric, or maybe even a tertiary metric, like something that you would look at as an extension to what you're already looking at, because gold and silver could be going down together, but silver could just be going down less, and so this could be going down by a lot, right? But generally, when this is going down, it is positive. And more importantly, you can see you have 1, 2, 3 weeks of gains completely wiped out or 3 weeks of advance completely wiped out in 1 week. That's a very sort of bearish signal. And so you imagine we take out that level from, this week, that this was a big, big plunge for silver versus gold, which caused this thing to spike. And so this is kind of the long-term signal you'd be looking for. On a monthly level, if you think about the longest term cycles, if you really think like really big picture, we just had a cycle that you would say is about 55 months, right? It had a top on month 44, which was a COVID crash. That's where it made an all-time high, right? Like it peaked, right? It was 126 ounces of silver for 1 ounce of gold, right? And then we had a massive crash lower. That was your big move for silver. It went up by like 100% in like 2 weeks in like July, before completely crashing, obviously, and just be going sideways to lower for the last 2 years, obviously. And since then, we've had this grind up, right? And so if we're being specific, what month are we on actually? Let me just take a look here. Actually, not price range, but date range. So this is month 17, right? And so if we're thinking about the longest term cycle, if we were getting a top on month 17 of a long-term cycle, that would be really, really bearish, right? Like you can see this was a top on month 30, and then the low came on month 60. So that's actually still technically just kind of even in terms of like spending 30 months going up, 30 months going down, except obviously in this case, this failed. This kind of broke all of these lows all the way down here. So what you might expect here is this structure here, that right here, this is your big downdraft. and then this is your bear flag, right? So something like this, right? Because imagine, because what you have here is this move here, and then you have this, your lower high. So then you'd expect something like that, and then we kind of move in that fashion. The question is this here the top? But again, important to kind of get a sense of like when this kind of ratio has topped out in the past, and it tends to go for a lot of months. So it could also mean that this is going to be a complete fake out. The thing that's important is that this is the July candle and it's about to close, right? And so that's really important, right? We have like so it's just 2 more days of trading, right? Well, actually, wait a second. It's actually just 1 more day of trading because, right, we're not going to really get anything, right? For gold, for crypto, different story, different video. But if we close here, you imagine, your next move, your momentum actually, you're much closer to making a new low on the monthly level, and this becoming a swing high, right? And your potential top, the same way this was a swing high and that was a swing high, and that like so. This is going to be very important to watch. But again, this thing is squirrely because it's a ratio, so it could mean that gold and silver. It doesn't have to mean that they're bullish, but it generally does correlate with bullishness when this thing is going lower. And you can see how extended it is above the 10-period moving average on a monthly level. So at the very least, coming down to touch that, right, getting down into like the low 80s, you like, it's even if it doesn't mean the big decline starts, it could rebound from there, and it could be, several more months before the big top. And you think about that, you probably are going to get the top on this thing when you get the low for the 8-year cycle in gold. Would be my guess, right? And so if we go to the metals themselves, just to get a sort of sense, so today is starting day 6. We did have good follow through on Thursday. You can see, this is a nice, clean daily move. And on the weekly, we have a clean weekly swing low. Very clear, right? This is gold again. And this is CFDs as opposed to the futures, but same exact pattern. So that swing low is active above 1739.27. And we're here at like 1750. So that's really nice. So really looking like, and again, this was really late, 31 weeks. So that gives you your cue that it is maybe your ICL. At the same time, this little failed rally like here, right? So like you had your little swing low here, boom. This was really weak follow through though. Now we'll see what happens next week, or tomorrow, or to close out this candle. Do we get big pullback and a big upper wick? We'll have to see. But we got then 1 week, 2 weeks, 3 weeks, and then 4 weeks atop. And then we moved lower. This was all part of one cycle theoretically. But the point is, we don't know when this is going to top, right? Like, so we'll get week number 2 next week, and then 3, 4, maybe that's all we get, right? We get up to like the 815 area, maybe even like we test like the 1900 kind of tees there. So we'll have to see. I wouldn't get super excited, because if you, again, focus on the longer time frames, this is month 79. And if we're thinking about a 7 to 8 year cycle, a 7-year cycle would be 84 months, an 8-year cycle would be 96. So we're like already pretty close to around where you would expect the low. So the question is, did we just get the low and we're about to move up? How likely is that? Or are we going to make a move up and then come down to make the low? How likely is that? Or are we just continuing to descend into the low, and then once we get that low, we'll obviously have a more sustainable advance? It's a question of what's the probability of those different scenarios, right? And watching the price action, seeing how that develops. Right now, I think it's the latter, right? The idea that we are just descending into the low, right? We're certainly going to get a little rally here. We've got an intermediate cycle low, but I don't know that it's going to get. I don't know how much progress we're going to see there, and certainly not something that I'm like super excited about. And if you look at GDX, definitely not giving you the most positive vibes, but that could really turn around tomorrow. Maybe we get like a total kind of about face. But for GDX, the last one, the bottom of the pair of the trio, like gold, silver, and miners, day 3 of the daily cycle, it was a red day, right? And we did get a rally at the end of the day, as evidenced by this, lower wick. So it ended up being a little red hammer. So we'll have to see what happens next tomorrow. We really want to see a high above this high here. So 26.36 is what you really want to see to start getting a little bit excited. That's just like 40 cents from here. And equally important, we have to wait until next week to get that weekly swing low. And that's going to be a high above the high of this week. So far this week we have a high at 26.36, right? That's the same level, right? That makes sense. Now, what would be the most bullish outcome is if we could make a high above last week's high. So that would be 26.54. That would give us our bullish outside weekly candle. That's what we really want to see. That's what we'd love to see to close out the week. I mean, the bonus would be if we can get above this high here. Well, that's 27.38. That's a reach. But like coming above here, like closing like right there, so above this high, that gives you some nice momentum for that next weekly candle and so forth. I mean, look how far we are below the 10-period moving average, which itself is continuing to decline, each passing day and week. So we're certainly going to get a little bit of a rally for sure. It's a question of how sustainable is it, but would be great to get a nice bullish finish to the week to show some sort of sign of life. And again, if you look at the monthly sort of chart here, it's just really ugly. We had this major big low, COVID bottom, and then we had a rally for literally 5 months. That was it. It rallied for all of 5 months. The S&P rallied for 22 months, right, off of that COVID bottom. The Qs rallied for 20 months. Uranium rallied for 25 months. This dog rallied for 5 months. And then it just kind of has been going sideways to lower. I mean, it didn't completely collapse. I mean, I guess that's kind of started now because, right, like it looked like it was going to completely collapse. Then it went up, teased us. Then it went down, made a slight lower low. Oh, it made a higher high, but then it made a much lower low. So, like, you would expect, like, you think about a pattern like this. I mean, what's the most likely outcome, right? Something like, like that, and then that, right? Like that, something like that. Now, the time frame for when we bottom is obviously going to be highly correlated with gold. I mean, I suspect it'll just be in line with that 8-year cycle low. So we'll just have to watch for any bullishness, that short-term bullishness from this weekly cycle. But, I'd just be really careful here. And finally, silver. We're seeing some great strength here, clearly. Which is awesome. This is why the gold to silver ratio is kind of collapsing. So I'd say of the trio, silver, gold, GDX, this is the horse to play. And so it is day 11. I mentioned in my last video, this was day 9, right? Is that right? So yeah, because this was 4, right? So 1, 2, 3, 4, 5, 6. Yeah, right. So it being day 10, not amazing because it's not super early in the daily cycle, but like, I mean, what an amazingly bullish candle. I mean, look how huge this thing is in full green in all its glory. And I would just kind of made up all of this ground right here, right? Like all this downdraft it covered. And so now it's a question of, can it take all of this stuff out really and come up to this kind of area, which you would imagine it can, because we are in week 2 of a weekly cycle, right? So this puts our weekly cycle low at week 24, the week of July 11th. We consolidated that following week, and then wham, we didn't make a new low this week, so almost made it, right? We have this little wick, this little pullback, but then whammo. I mean, we'll have to see how we close the week, obviously. And we're actually pretty close to the 10-week moving average. And what we would expect next is for it to kind of turn up a little bit. So you can kind of see it's been going clearly down, but like it's obviously kind of stopped going down to some degree. And so this is looking pretty bullish. Hopefully, you would expect like, so this last weekly cycle, just be aware, topped out on week 6, right? So we're in week 2. Next week, starts week 3. So we could easily get a top in the next 3 to 4 weeks from here, but that there could still be some nice upside. Like you can imagine, we come up, can sort of test this area here, which will get you, yeah, so a good 10-15% easily in terms of like a quote unquote bear market rally. And I think I'll just look at the dollar really quickly, because I think that always has obviously huge implications for the metals. And so I believe we're actually starting day 23, right? It's what, 13? Right, so today is day 23. I mean, this certainly looks like a bear flag that's like that's like really holding together, hasn't dumped yet. This is the daily chart, right? Like, especially, I mean, this candle just looked like we were really kind of going lower. And most importantly, what happens here will really dictate what happens on this weekly cycle. That's how it works. The lower time frames cascade higher to the higher time frames, and if they're strong enough, right, they cascade to the higher time frames. So we have this shooter on the weekly, week 8. We have this swing high, right, from week 6. So the swing high is actually active below the low of that week, which is 106.895, right? And so we closed below that last week, and now this week we're threatening to make a low below the low from last week, which has already made a low below this week, right? So that would be 2 consecutive weeks of making new weekly lows. That is literally the definition of a downtrend, right? That means the downtrend is starting to extend to the weekly level. It's starting to, the daily downtrend is starting to create a weekly downtrend. And so now we'll have, like, really going to be important to see this weekly close, right? Because again, this is week 8. This is a potential top for the weekly cycle on week 6, which is really early. Like, notice, last weekly cycle topped out on week 17. The one before that, week 26. The one before that, which wasn't super bullish, even that was week 12, right? So this is not looking great. But notice you had one that topped out on week 3, for instance, one that topped out on week 2. So you get really early ones. So 6 would not be unprecedented. Like a top on week 6 would not be unprecedented by any means. That would certainly be huge fuel for the metals, though. And you can see we're like hovering pretty far above the 10-period moving average. We've been like just well above it for several weeks. So you have to imagine it's going to at least kind of revisit that, or at least kind of consolidate here, and this will just kind of catch up kind of sort of naturally. Either way, it kind of correlates with the picture that metals should have some daylight to some degree.